Hey guys, I'm Roger Herring. I am the investor's accountant, and hey, welcome to this edition of Ask Roger. Every year I'm asked the same thing over and over again. Should I self-direct my IRA? I'm also asked another question. Why do I want an IRA? Well, let's not talk about just IRAs. Let's talk about retirement in general. You know, I've got a lot of people that come to me, especially the younger generation, Gen Z, some of the little bit older ones there, and millennials. They seem to always want access to their money. They don't want a 401k, they don't want IRAs because they can't access the money. Well, actually, you can, especially if you're using Roth. You can't access the earnings, but after 5 years, you can access the basis. Okay? So you can get back what you put in and you can use it. And your 401k, if you set it up right, you can have a loan provision in it. But all of these are for something different. Today, we're talking about self-directing. I want you to think about retirement the same way I do. It's just another pile of money because to retire is to begin to die. You know what? I don't plan on retiring. I will always have my hands in something. Men, especially, we lose our focus when we retire. I watched this happen to my father. I'm not going to let it happen to me. So this is just another pile of money that compounds, compounds, compounds. If it's Roth, I'm never going to pay tax on it. If it's traditional, I'll pay tax at the end. If you don't have it qualified to where it's going to compound and you pay taxes as you go, did you know what could have grown to be $1,000,000 over 20 years is going to not do more than about 15,000 if you're lucky? Yeah, that's the thing. If you're not compounding money and you're paying taxes as you go, you're messing up. So here's some questions for you. If you want to self-direct, should you? Okay, not everybody should be self-directing their retirement. So the first question I have for you, are you skilled? Are you a beginner? Do you know how to flip some property? Do you know how to trade stock? Do you understand crypto? Are you good at what you're doing, or are you just now learning? If you're just learning, the answer is no, you should not self-direct. Now, do you understand the rules? There are rules. There are prohibitive transactions. There's specialized taxes. You've got to understand what you can and cannot do. If you're self-directing, let's say that you're doing a rental property, you can manage it, but you can't go out and swing a hammer. That's called self-dealing, and if you have an IRA, it's going to blow the whole thing up. It will trigger a distribution and the penalty taxes and the regular taxes. Now, let me ask you this one, because this is what kills most people. Do you have the bandwidth? Do you have time? I have watched people leave their money sitting in the self-directed IRA that they wanted for months, and it does nothing. And it's not compounding, not even a little bit of interest. If you've not got it invested, you're losing purchasing power. Last, do you have enough money? Because a self-directed IRA with only $10,000 in it, what's the point? Something like that, you're going to be better off looking at ETFs or index funds. Okay? Go out to Schwab. Now, that's something else you should understand. Let me ask you this. What is a self-directed IRA? Well, self-directed IRA, you control the investments. Well, doesn't Schwab have that? No, Schwab doesn't have that. None of these institutional investors have that. You can invest in what they say, and they call theirs self-directed because you're picking the stocks. Okay? You can invest in stocks, bonds, or certain derivatives, which means contracts. Okay? when you're self-directing your own IRA or 401k, you've got a whole lot of things that you can do. So what do you invest in? Well, you know what? A better question is, what can you not invest in? You can't invest in life insurance, certain contracts, those derivatives. You can't invest in collectibles. You can't invest in personal use real estate. And most, but not all, coins. And last, S Corps. You cannot invest in your buddy's S Corp with your self-directed funds. So what can you invest in? Stocks and bonds, stocks of C corporations. You can be the bank and provide loans. You can own rental property. You can own C corporations. You can own partnerships. You can own funds and syndications, virtual currency, literally almost anything. Okay? But those are the main things. Now, let's talk about some of those specialized taxes. What is UBIT? Unrelated business income tax. Well, what creates this is ordinary income. You see, your IRA is supposed to be invested in passive income. Now, that could be from C Corp stock or from rental property or other passive activities. Okay? But a lot of these partnerships, they flip property too. And they have ordinary income. And when they have ordinary income, that triggers the unrelated business income tax. All right. Now, what happens? Well, trust rates is what happens. Trust rates means that you're paying tax on the money that you invested on your return at 37%, the highest rate. That kicks in at around 13K, by the way. Okay, now how do you avoid it? Because, Roger, I like to flip property or I wholesale property. What you can do, 3 flips or less in 1 year does not rise to the level of business. Now, if you invest in a partnership that creates ordinary income, you can't get around that. You're going to pay UBIT. Now, Roger, I want to flip more than 3 a year. Okay, well then what we're going to do is use a blocker strategy where we create a C Corp and you do your flips through a C Corp that is owned by your IRA. That's how that works. Now, there's another type of tax, and this is specifically for IRAs. Okay, look at that last bullet. It doesn't apply to 401k. Unrelated debt financed income tax. Well, what happens here? To the extent that you borrow money to finance a deal, that is taxable. So if I go out and I put $50,000 down and I borrow $50,000, I'm 50% leveraged, so 50% of my income is taxable in many circumstances. Now, here's the thing to remember though. There are minimums, so if you're not making over the max, you're not going to get hit every year. Where you normally get hit is when you sell off the rental property. Now, the rental property, over time, what's happening? The value of the rental property is going up. And at the same time, the debt is being paid down. So now you're going to have a totally different ratio on, instead of 50-50, you may be 90-10. Not so bad. Oh, and you can do a 1031 exchange and avoid this tax totally. Now, the other way that you get hit with the UDFI is if you invest into a fund or syndication. Most of those are also using debt in addition to the investment. So that can trigger unrelated debt financed income tax for you too. Okay? Now, here's a nice little trick that I love to use with self-direction. It's called the checkbook LLC strategy. You can create an LLC and the member of the LLC, those are your accounts, and now you have checkbook control, so you don't have to keep going back to the trustee to get your money. You can control it with a checkbook. Here's the thing though, you still have to follow all of the rules 100% of the time. So if you're going to do this, you're going to have to educate yourself. You need to know about self-dealing. You need to know about prohibitive transactions, what you can and cannot do. You need to know about who's disqualified. Who can you not work with your IRA? Now, I'm going to suggest that you guys read the Self-Directed IRA Handbook by Matt Sorensen. He is an attorney, and he is the business partner of Mr. Mark Kohler, JD CPA, who is one of my mentors. In fact, the MSCTA designation comes from Mark Kohler. This handbook is in its 3rd edition. And Matt is kind of unique because he helped the government to write the laws around self-directing. So I really suggest that you get this book and read it if you're going to self-direct your IRA or your solo K or your regular 401k. So I hope you found this informational. Be sure that you go into our database, into our channel, check out all of the free education that we have. If you're an advanced client, you've got access to a whole lot more than just the base videos. Hey guys, Roger here again. Thanks so much for checking out our video today. Be sure for lots of free education to go to our channel, subscribe, and click the bell, and you won't miss any of the new posts from Investors Accounting. They're absolutely free education for you. Hey, thanks for coming by, and until the next time, Roger out.